This is the uncut series of videos. I hope you enjoy. These are all uncut videos from my live trading room. We have a 5-year back catalogue, and what I will be doing is releasing uncut versions, a few videos a month so people can learn off them. It's a heck of a racket with those birds. Hopefully you'll learn from them. It shows you the wins, it shows you the losses, and it shows you exactly what happens in the real trading room. If you've got any queries or questions, please put them in the comments below, but also support the channel, and please give me a like and subscribe, and it'll help the channel, and hopefully we'll get a lot more videos out for you. Cheers guys. So we traded the FTSE, Forex, DAX, a bit of gold, and let's see what happens.
I've been on early. I forgot. I was too enthusiastic, I guess. Right. Okay. Good morning. There's a couple on now, so I'll do the job. We'll get cracked off. Right. Okay. ATR today on the FTSE is 10. Trading plan. Quick look. What I want to do today. Oh, what's happened? I don't know what goes on when I'm flipping. US markets are closed today, so the Canadian markets. We've got President's Day in America and Family Day in Canada. So I expect the markets to be pretty sluggish. One thing I will say, guys, is please do not be tempted into doing trades in American markets today. The markets are closed. Cash markets are closed, but IG are making a 24-hour market, which really means is you are going to be trading against the broker. If you trade any US market today or Canadian market, you are trading against the broker and subject to wide spreads and spikes. The chances of beating the broker on tight stops are next to nil. So I would stay away. So today, what I'm looking at today is, I never knew we spelt the FTSE that way. There we go. There we go. We're looking to close the gap, and we've got a trade on at the moment for a gap trade. I think that alarm wasn't for me to get out of that gap trade on a 926. And then we're looking to close the gap, I think, from a 5-minute fractal perspective. Aussie USD, we're looking for a break of 69.06, and we're heading to those particular points. Aussie Japan, looking for something that doesn't have the US dollar on there. The reason Aussie USD, it's one of the favorites, but also there's been a leak in the RBA minutes of the Australian Bank raising interest rates again, and we're waiting for the minutes tomorrow to confirm that. And they've been very hawkish, so we've got strength to the Aussie at the moment on speculation. So we'll do that. We're looking at fade of the fill today. We're looking at buying the close if we can, and if we get below the close, we'll have a go at CBOS as well. DAX BBO is long today, and the Aussie USD, again, 12 o'clock, 12:30, we'll be looking for a split, one direction or the other. Don't expect that to be too exciting at all, since half the world is not trading today. As far as FX is concerned, Americans are big FX traders. All day today, FTSE and DAX are the things that we're looking at, heading up to the numbers that we've said there. And we're actually in gold. Now, it's interesting where we are. This, as I mentioned Friday, gold is in a position that could reverse and go longer, but we'll see. With the American market closed, the gold might just slosh around a little bit, if that's a technical term. So there's a trading plan. That's what we're going to look at. That's what I'm looking at today. So I've got my order. I'm trading this as a 926. I think that alarm was for me to get out on a 2-minute reversal, but we'll have a little look at that. Yeah, we'll have a little look at that. So where are we going to go today? We had a new all-time record high again in the American markets. I had a target of 80.40, and it actually went to 80.44. So we're a bit 4 pips away. but nevertheless, that's not bad for the week, within 4 pips on the week. New next extension is 80.55, but I do have an ambitious, depending on what's happening with news coming up, a lot of news releases back end of this week. We've got a tasty Friday target, I think, if it's all good. But we are starting to show this pattern here, a topping pattern. We've got higher highs, higher lows, but suddenly indecision. We have on Sunday, this is a 1 day, you can't really count this, but this is an inside candle, which means its reach is within the high and low of the previous day. This is your first indication of the market hesitating that might be rolling off. And after a few 4 higher highs, it's, you know, you expect that, but it's hard to judge that candle on a Sunday, on a Monday morning from a Sunday. So we just had to watch out. We may be, this is a topping pattern, so the market may come off. So I'm keen to short the market from around these areas down to the extreme gap and closing gap today. So that warning with the US markets, be very, very careful. I want to have a look, and we'll do a review of Brent Crude today, because it's starting to get my interest again to trade Brent Crude. I know the last trade we only made $3 a barrel, but you know, I got it wrong. But nevertheless, we still won, but not enough. Let's get into the FTSE. So we've got an extreme gap here, and we have the closing gap down at 8,004.4. So what I have done, 926 cross here, break the 5-minute bar. Obviously, I'm in 2 pip spread +1, which is 10.7 pips, going for 16. We did have a cross up to say get out. That was my ding dong. That was my alarm bell to say potentially get out. But this is a closing gap trade, so I'm going to just I'm going to keep this one in for the room. What I would say today is I'm quite happy to do, if you're not already in the 926, then a break of 10 pip stop, 15 pip target, guys, and we're heading into exactly the same number, 8,005. And I've just given it a bit of wiggle room. The ATR today is 9.9. I've given it a 10 pip wiggle room, because we might be loads of stops just around here. Above it, it'll be above here, but if this breaks, and the market's going to be quite happy to then continue on. If we get a spike up through here, then I just want to be a little bit away from, if the market comes down then spikes up, that'll be, how can we put this, a bit of unsavory action from the brokers, from market makers taking stops out. So we just want to be pretty careful, and well, that's about as careful as I want to go in the morning. We either get the trade or we don't. The market action suggests that we've got a high here, closing gap here, and we've got the close here. And we missed Friday because I was on a 1-to-1, but I will show you some. We'll go over and review what happened on Friday on the close, because it's quite important that as you start to learn to trade a little bit more and get a bit more confidence, some of these little bread and butter trades you should be able to do and have a look, especially on a Friday after money has been made into the markets. Trading from like 3:30, mainly focused around 4 into the close, and looking at reversal bounces. I think we looked at that, and I forget now. I think there was a couple of good trades on it, but there's at least one trade. I don't know who did I look at that with. I think it might have been, was it you, Bridget, on Friday?
Yeah.
Yeah. So going through the action on a Friday. So right, I'll just turn this alert off. So we're looking for a breakout here, or if you're in the 926. I'm in both. We've been tagged in. You credit 4 seconds early, but we'll see. We should get this. It's easy saying you should get it. It's a different matter actually getting it. I know. So what we've got here is a closing gap here. X gap. They nearly always close an X gap. So we've got the X gap, and what we want now is the market to follow through on the X gap. Oops. Oops, got my stuff out of there. So did everyone take the 926 or not?
No.
No, it's okay if it's not in your plan. Did anyone take the fractal break? No, that's okay as well.
I'm just watching, and I'm a bit nervous about going short on the FTSE at the moment, so I'm probably going to go with the trend.
Buying fade of the fill is a good trade with the trend.
Understand.
Yeah, that topping pattern's a bit of a worry to the market. I think the market could come round and test these lows in here, but fade of the fill would be good. I'd like to see the market, to be honest with you, to blow down through the close, come down to 8,000, the BRN trade, and then put a lift trade on the close, fade of the fill, and boom, not a fade of the fill, but a rise trade, rather than hitting fade of the fill and the market going down, because the market could come down onto the daily pivot. There's nothing really stopping it, to be fair. When you look at the larger picture, the market's clearly negative on the open. We did have the market rising high, and we'll talk about that a little bit later. We saw lots of big orders got posted on Friday into the close. So we did expect the market to be a lot higher this morning, because people were institutions were placing trades after hours, well, on the hour, if you will. So we're coming up now on the first one for 1%. Kind of three quarters there. So 3 quarters there. What we usually do on the morning, we put our stops to entry. Oh, it's not allowing me to do it. Oh, yes, it is now. So completely free trade, and we're looking for 1.49 and 1.5%. So we're looking for nearly 3% here. So when we say nothing really stopping this coming down to the pivot, if this breaks, and there isn't, so that's why today I'd be cautious. I like fade of the fill, but it's where, you know, putting your stop, a tight stop today, it would have to be, well, 14 pips. Oh, it's okay. Yeah, we could do fade of the fill at 14, or we can do a rise trade, but then that would only be about 12 anyway. So yeah, but I think we could see this market come down towards the pivot, I think, but this needs to hold. So we'll see.
Can you share the pivot levels again, please, Steve? You haven't done that today. I've got them anyway from another source.
Didn't I?
No.
Oh, heck. Sorry, I thought I had. That's okay. We know I'll get them anyway, don't you?
Yeah, I can get them anyway.
There's a big video on how to do it all. They are, they're all there now.
Thanks, Steve.
I wouldn't care, I did them on Saturday. Got told off, got my daughter visiting. What the hell are you doing in that room? Come on. I got the hand on the hips. Aren't I more important than bloody numbers? Right. Looks like this pivot's been bought up. It might have been bought up. This the high here, which is the gap. Be a bit this, you know, this we obviously can't lose any money at all, but be a bit disappointed if that happens. I'm expecting the market to roll off. We'll see. Quiet day today. See the volume 2,800. That should be something like 70,000 on balance. American market should be around about 250,000. We'll see nothing today, hardly.
Yeah, the Americans no party.
Yeah. Well, it's a very slow day, isn't it? We've got 3 wins. It's a bit, if this gets stopped, it'd be a bit of a shame. We had 0.75% on here and 1.5% in the bag and didn't take it. But I want the close. So if it's free, then quite happy. Anyway, let's just while we're waiting, no point in watching this, I'm going to put an alarm down towards the close. We'll have a little run out and have a look at where we are with the other markets. So the US, this market, we're trading economic news with the RBA and RBZ news that's going to be out tomorrow, and the leak that everything's great in the woodpile in Aussie. And yeah, so this was the trade on my trading plan. I think I called this fractal, I called that fractal break 906, I think it was it? Yeah, 906. So the market did pull back, had the fractal set and then just walked away. You could have had a much tighter fractal break if you'd been watching this, but I was doing multiple markets and doing analysis on the FTSE, so I had a much wider stop. But I'm looking for a 61.8% retrace on the daily pitch. So if you look at the daily pitch, we're just starting to pull through, but we are, market is positive on the daily. 926 momentum is to the downside, so kind of looking at the 4 hours to the downside. On the 1 hour, you can see quite clearly we're having this little bit of a rally based on the news that's out. So I was looking at where we've got a descending resistance line here, coupled with that 4 hour negativity. Then the Aussie, I'd like to kind of sell the Aussie into this descending line here. If we can get there, my target is a 50% 61.8% retrace level. And if the market continues to go up, then I'll be looking to sell into this area, which is 69.73 to 69.94. I think we can probably get something out of there, but we'll see. And I wanted a pair today that won't be influencing the American market with the Aussie Japani interest rates. BOJ keeping interest rates same again. Good news for the Australian dollar on that news. So we're going to get, I think, a rah-rah on the Aussie, and Japanese yen. It's just steady as she goes. So I think the Aussie Japani will probably win the day. and it might be a bit of a grinder. We did need to have this quite a large stop in comparison, because this market does have spiky legs. The other market I was interested in was Euro Japan. But yeah, Euro Japan, quite into Euro. Sparked a little reminder. I was talking yesterday with somebody. We've got CBDC on the horizon, which is quite interesting. Jobs are on the boards and the government websites to put central bank digital currency in place between, well, moving forward this year for the next 18 months. But with Basel IV requirements now in play and locked in for January this year for the banking sector, which means any bank that's lending money, mortgages and the like, has to, oh, that's our target fully hit. Very nice. They have to have assets backed, fully backed. And since the RBZ nearly went bankrupt, the RBS nearly went bankrupt in January, that probably no one knows about. Government had to bail them out quietly, otherwise the bank would have gone bankrupt. A lot of the banks don't have the assets to be Basel IV, so how the hell that will play out at the moment, I don't know, with central bank digital currency. And the other thing that's interesting is I keep talking about BRICS, and it's something that people should investigate and know a little bit more about. But UK is now part of BRICS. UK has joined BRICS, and they are using sterling silver backing the Great British Pound. The other thing is, and I mentioned it before, is Germany are looking to put back the Deutschmark backed by gold. They've applied for BRICS. Now, if Germany move out of the euro, go back to Deutschmark, and they'll obviously come out of European Union, there only was Germany and England putting into the market, into the euro. And we all know Greece is all but bankrupt, so is Italy, so is Spain. If Germany leave, then I think you can say goodbye to the euro, not necessarily European Union, but the euro will might go TU. And if you've got assets abroad, that's something that people must be very conscious of, because if your assets are in Spain, which is more or less bankrupt, and Germany get into BRICS, then I think your value of any assets in Europe will go through the floor. So I think it's time to think about getting rid of assets in Europe. Not advice, just my own personal opinion. Right, I'll stop my waffle. We're okay on Aussie USD. We're not really moving Aussie USD, not really moving on odd Japani. Let's have a look at how far this is going to go. Now, if you wanted to do fade to the fill, and we've got that down as a trade. So we want 1.49 on the 926, as I mentioned before, and 1.5 on the FTSE 5-minute frac. So we're already 2.99 up on the day. So well done to everyone that took the trades. Those are the trades in the trading plan. Oh, it's doing it again, isn't it? All right. So that was that trade, 1.49, and then the fractal trade. We did two, didn't we? So I need to put that in. Fade of the fill, FTSE frac. So don't get these confused, we'll put it separately. Gap. So we can distinguish them. Right. Now I want to see this. I'm not jump, as you know, it's a fit of the fill. You know what the stop should be. It should be 14 if you're going to do this. But what I want the market to do is to come down a little bit more. And what we want to do here is to have a stop of 14. Not 1,414. And we want a 22 pip target, I think. Just put this in, I think that was what we were looking at. So it is a fade of the fill type trade, but we're going to just buy 104, 8,004. We're going to zoom out. Oops, to the 2 hour, 1 hour, sorry. So you can see what we're trying to do. And you'll notice my stop will be under the daily pivot. Yeah, under the daily pivot there. And what I'm looking for is a market to just go where it's been out of hours. Now, in the market, kind of not to self really, if we won both trades on the FTSE, then really we want to be, do we really want to be hammering the FTSE again? We've got 2.99% out of it this morning. The Fibonacci extension is 8055. I was going to get that energy in the market to the top side today. Not sure. We typed in, we're clicked in now anyway, so that is the trade going long. I can't see the market really going much below the close. I can't see it going below the pivot. I think the pivot will attract quite a few system buyers. If the market does come all the way down here, then CBOS is obviously a trade to be had. But I think that's about as good as I want to trade. So it's not a fade of the fill, it's a rise trade. 8,004, 14 pip. Just move within the scope of the priced range that we've got at the moment. So that will may well add 5.7% to the piggy bank, or if not, it'll take 1% off us to leave us with 1.99 for the day. So we're still quids in. It doesn't matter whether it loses or whether it wins.
Stephen, can I just, so I've put that in, and it's just, what are you saying, do it now?
It's done.
Right, okay.
You can see it's -4 down already.
Right.
But it doesn't matter. The trade is going long. If you haven't put it in, then it's fine to put in.
Right.
The only time I would trade along now would be either down by the daily pivot or down by CBOS, because what we should see is this hold. Now, if this doesn't, what this might be, we might be shaking the tree. People putting crazy tight stops in, and you know, so you want at least five to 8 pips below here, and that might be just taking stops, or it could well be the market being driven down, because it does need to come back. The market is negative this morning. It's not positive. But we've closed the X gap, and you know that come down very quickly as we noted. The FTSE likes closing the extreme gap, which is the yesterday's daily high. And you can see it came down there, and for some reason people started buying. There's no accounting for what people do really. People were buying on the daily high because everyone's got in their mind the FTSE's going long. Well, not necessarily. It's put in indecision candles on the daily, which is a strong signal that beware, the market could roll. So what if we are going to buy, and you know, there's no reason, no news to stop the market continuing its trajectory. But if we are going to buy, it won't value. So the first value point is the close, yesterday's close.
Right.
Another good value point would be the daily pivot. Now, if we break the daily pivot, it gets you thinking about, is that indecision pattern that we spotted on the daily coming into fruition? In other words, are we going to get the market to breathe and come back a little bit again after the market's put these 4 high highs and these 4 unique highs in that it has? Well, don't know. We just don't know. It's kind of on the 4 hour, which is the time frame that we trade in. It's all a bit wish-washy. I wouldn't say mismatch, but it's just a bit messy. But it is certainly worth that rise trade, certainly worth trading that, that's for sure. Oh, excuse me a minute. About to trade. Right, okay. Probably, let's have a little look at where we are with gold.
Gone out.
Let's have a little look. All right, yeah, gold's so staying away from gold now. We did do, if you remember, the gold futures. So gold futures, we took a gold futures last week. It's making a few rupees now, because we did expect the market to be potentially putting in a bottom on gold. What's that noise? It's like it knows I'm looking. I'll leave that up. Put it on a different screen. So with him, I thought this would just go sideways, but it's gone up a wee bit. The issue that we've got, of course, is when we're doing the analysis, was this is the potential reversal point. That's why we put the gold options in, to start to catch, if you can catch the bottom. Now, with everything that's going on, especially in the American markets, it's quite interesting. America is not reporting at all about Basel IV. IMF is instituted it, and Wells Fargo, Bank of America, they're all non-compliant. And I think it's when is the crash going to happen? Because I firmly believe it is. And I was looking at some analysis. This is going to sound crazy on gold. The first point in gold, looking at how bricks are pinning gold and how over half the world's now in bricks, pins gold at $3,000 an ounce. And we're at 1,800 now. We want to buy this into March. Statistically, March is the best time to buy. Statistically, but we've never had this economic situation in the world now where we've got a potential prime subprime issue again on the banks because they haven't got assets to back the lending. So the lending structure is still it's called fractional reserve. So for every £1 that you put in a savings, the bank's allowed to lend 10 times that amount, even if they haven't got the money. They're allowed to exploit every pound by 10. But now, since January this year coming in, on last week, a couple of weeks ago, they've got to be Basel compliant, Basel 4 compliant, which means they've got to have their assets back. So it's all in contradiction to each other. And there's been a few massive banks caught with their pants down. So we are going to, I think, have a lot of reclaims on houses, and inflation's going up. Wages are going up. Interest rates are going up. You can't have them all going in the same direction. If the banks are trying to strangle people's spending by putting interest rates up to bring inflation down, but inflation's still going up, there's a big problem. There's a big underlying problem somewhere, and the banks need to be reset. Banks are trying to do a reset with central bank digital currency, but Basel IV is not allowing them to do it. So what the heck is going to happen? It's way beyond my pay grade. But all these things, and that none of this is being reported in the press. BRICS isn't being reported in the press. It's been suppressed. It's just not happening. So the thing for me is, if everything goes TU, this is going to might sound daft, and I'll give you the information probably tomorrow when I collect it all up in the readable format. If BRICS is evidenced and Germany do join, we're probably looking at, in the next 3 years, gold being $15,000 an ounce. And that's not because gold's brilliant, it's just because the maths make it that. Because if currencies are being asset backed, that's going to be the value of gold. And the other big asset that everyone uses, even though we want to be politically correct, is oil. So oil could well be a nice asset to look at buying on the lows. That's just my personal view. That's what I'm personally looking at. So this is the first stop. We'd like it to come all the way down here for gold, and we'd like to buy gold, and we'd like to keep buying gold all year as soon as we can find the bottom. But whether we've found the bottom or not, I'm not sure. You can see the complete indecision on the open, and a wee bit of pullback here. So we don't know what's happened with America. Gold is, as the American markets go down, which I'm expecting to, gold's going to go up. But I think gold's going to go up anyway. But where's it going to go up from? Is this the base? We don't know. We've lost 1% this morning on this, because I was in from last night on the trade that I mentioned. So it's a toughie really on what's going to happen with gold. But I'm interested in crude. I've got crude up here as well. Crude. Bring crude up and we zoom it right out. That's another asset. The thing is, you can't depreciate, you can't depreciate oil, can you? It's a hard commodity. You can't print oil. You can't print gold. You can print dollars and sterling and the rest. You can't print oil and you can't print gold. And you can see, I tried just after Christmas, and we got a rise in the dollars. I think we bought, I forgot what we bought at now. It was just below 70 and made a few dollars on it and got out. But you can see where we are. I can see where I've got my alarm in. It's under $80, 79, 80 odd dollars. I think if we can get into here, then I'm going to start fading into oil again. And all the news and everyone, all the pundits say, no, it's all, that's no good. But don't listen to what the news tells you. You need to, kind of look for yourself, understand the technicals and what's going on globally. There is, well, I know Biden election, all they have to do is open the taps and make oil more available, don't they? And the price of oil will go down, but I think they're running out of manipulation techniques soon. So this is my kind of line in the sand on a daily, weekly basis. If we're trading above here, I think the market's likely just to pick up and run. We have had the first attempt and it's failed. We've had another little attempt last week, indecisive, and it's rolling down. So I'm thinking of value buys, and I'm thinking of longer term, and then adding. And we did trade last year, and I think we forgot what we bought oil at now. I think it was around about the 85, 86, and we got out at $125 a barrel, which up here. So we did quite well. Not as well as we could have done, but did quite well. And I want to buy it again. I know the timing's a year apart, but I'm keen. So let's get into the detail a little bit. I'm not putting my trading plan because I'm just watching. So as you get into the, with my pipe dream, waiting for this market to come down to buy all the barrels and store them in the garden, but I think if we can get down to here, I'd start. When you see technically where the market's touching, going up, I think if we can get somewhere down here, I'm going to be interested in oil. How low can it go? Well, it could go. It is if the wheels of industry stop, if people stop putting makeup on, if people stop fertilizing crops, then yeah, it could come down quite low. But I don't think any of that's going to happen. But if we're going to be buying at under $80 a barrel, can you see the market coming down below? The most it's going to lose is $15 a barrel, absolute max, I think. Technically, you can see with the market, it's just not this double tap here. Then the market was not allowing the oil to come that low. And then it rallied off. We've had a double tap here and another low test here, and although oil has come off one heck of a lot. When you think about this, if you look here, we've got an opportunity for a 60% rise. And not forgetting a retail account's got a 20-to-1 ratio. So you've got 1,200% return potential on oil using a spread account, which is massive. You don't really have to catch it at the bottom. Probably a slower trade with a break of $89 a barrel heading up to 121, then 125, then 140 is probably where to go. But I'm talking throughout this year now. If I can see this coming down, I'll keep looking at it and I'll keep mentioning it because it is going to go into my trading plan. I'll just be a wee bit disappointed if I've missed this, trying to be greedy, waiting for this market to come a little bit lower. I was hoping it was coming down again today, but it's just meandering around. But I think, yeah. I'd like it to come lower to buy, which is the short answer. Technically, I'd like it to come lower. I'm just having a look at these. People do, especially in oil, people really do buy patterns. That's 147 pips. Where's 147 pips here? And that would be a sequenced low, looking at the way the market last time come with 140, you expect the market to maybe come down to here. If it doesn't, then you can see the aggression is starting to run. Let's have a look in the 1 hour. I don't like that look. I mean, I want it to come further down. This doesn't look like it's going to. This looks like it's poised for a bit of a rally into here. It's looking at roughly $2 a barrel, rise back into these levels. But if you want to get into the micro, then oil is a 15-minute frac like gold is. Oh dear, look at that. We've got the energy level with us for a fractal breakout with the 9 and the 26 and the momentum going up for going long on oil. Just can't bring myself to buy it. I want to buy it lower. I want to buy it under $80. So we'll keep a track on that one. And I'm not interested in gold now. Now this didn't hold. It doesn't have my interest anymore. We're breaking out of this structure. What this could actually be. Get the wave one up, wave one on a 15-minute, 2, 1 on a breakout, 2 in a pullback, and then another 1 going further up. So especially with the American markets being close today, I prefer to take a hit of 1% and sit and watch what it's going to do. It might come down to the target of 120, 18.21, but could be probably a slow day. You can see these high pins. These might be just. What was our stop? Was it 47?
Oh, crikey, I can't remember.
Yeah, it
now.
was, yeah.
We only had 6 pips stop.
Yeah, from 41.
I think it was.
Yeah.
Yeah, I had to go with it as well. It's I thought it was a useful one.
Yeah, that's a shame then, isn't it? Because we got stopped by 0.5 of a pip.
Yeah.
But I
My
didn't.
concern was always Sunday night open on the Asian, but it did go down, so it was kind of heading the right way. And I went to bed.
Because I think we're going to come a bit further down, but no one can really pitch this and know that they're going to be right at the moment with gold. I've seen calculations at $15,000 to $24,000 an ounce in the next 3 years, which is just ridiculous. But if we go central banks go central bank digital currency and BRICS is going to come online, which it looks like it really is going to, then there's only one direction gold is going to go, and that's up. And if you're using central digital currency, then the fintech, the financial technical backbone, I think is going to be XRP. And XRP at the moment, I think if with the 3 billion XRPs in circulation at the moment, and if CBDC is adopted in the year, that would make XRP $111 a coin as an altcoin. And it's 39 cents at the moment. And that's just the start. And as soon as everything starts transacting, the value will be going on. So if you're in XRP, obviously you're going to be in Ripple as well. That's for the crypto people, if there's any. Takei is not here today, but she's a crypto person. Right, let's go back to the FTSE. We're nearly 1% up. Of course, now our trading plans a 15-minute bar reversal as well. But so I'll just mark up what we're doing here so I get this right. So we've had 2 wins, 1 loss, and we've got this in trade. From a sequence point of view in trading, so I just don't know. The thing is coming in the back of my mind here, we've lost on gold and got 2 wins on the FTSE. I'm just considering whether I'd want to just cash in at 14 pips if we get it, just to offset the gold and stay 2.99 up and wait for the brunch breakout and the 12:30 trade, and look to have a 2 to 4% day.
Yeah, so I've just, because I didn't put much on gold, I only put 0.25%, I think. I've just cashed out on my FTSE to end up in the black today to
Great.
start again.
So
No,
Stephen,
that's great. It's about managing your money, managing the risk.
Stephen,
Yeah.
where it says 13.4 points, that's how far up it is.
This
gone down
number
to
here,
1290. Yeah,
Yeah.
yeah.
From the entry, yeah, it's gone up 9.4 pips, 8.4 pips, and your
Right.
risk is 14 pips. So your risk is 14, 1% at 14. So you're kind of 3/4 of the way up. And as Bridget explained, she said she didn't want to short it, which is absolutely fine, because it is a 4-hour, it is a daily bull market, although we are toppy. She's quite right in thinking that way. I trade what I see, and the market did need a pullback before going long. So she traded it long, lost on the gold, was only a small amount on the gold, which was quite prudent. And now she's paid for a loss on the gold.
Right, I see. So so you're saying you would come out of this earlier than the 22?
Well, the reason I'm just trying to explain the reason why I'm doing that is because we lost on the gold.
Yeah, I understand why. I just don't know how to do it.
You just press the X.
Right. All right then.
X marks a spot. And that if 1% is good, and 1% is good, don't get me wrong, 1% is really good. Or
Right.
you only need to do 2 1% a week, and that's it. You're done for the week. That's all your money made.
Right. Okay.
But it's. Oh, we're getting the cross up again. Get that ding dong bell.
Yeah, it's coming up again now.
Yeah.
Just slow today, isn't it?
Yeah, we're expecting it slow. With
Yeah.
a lot of traders won't be trading today because it's like, well, half the world's shut. Not going to waste my life sat in front of the screen. So I wanted to get in. And the thing you got to remember is with traders, if they don't think anything's going to happen or people get bored, market naturally falls away because people get bored and they walk away from the market. So you got to play on people's mentality and how people trade as well.
And that's why I came out, because this could reverse now, couldn't it?
Oh, yeah.
As always, of course,
it could easily reverse. So for an exercise point of view, and just to help June, I shouldn't. To help people who are learning, is why put your trade at risk. So normally when we get around about 3/4 of the way up and we think things might go wrong, and we're kind of 90% there now, 80% there now, we want to protect the trade. So how do you protect the trade? Well, how to protect the trade is do what we call STE, stop to entry. And to do that, if you move your cursor where your stop is, you're minus 14 pips, you'll see the cursor change from your pointer to a double-headed arrow like that. So what you do, you put your cursor over there, you press once and keep your finger pressed, and then you move your mouse until this minus pips goes to 0 or just slightly over the 1, and goes green. And so there's a 0, stop to entry. I personally like to win when I lose. So I personally always psychologically say I ain't going to lose. Even if it's only 0.1 of a pip, I want my 0.1 of a pip. So what I now have in the marketplace is a completely risk-free trade. Now, if I want in the sequence to come out and get this trade now to pay for my loss in gold, I'll do the same. I'll take the mouse here, press the button, drag it down to 14. So
Right.
press 14 there, and then I let go. And now I have a free trade. Now the free trade, if it loses, I lose nothing. If it hits my target, it then pays for my 1% loss in gold. Now, if I had a different mindset on, think, well, I'm bugger this, I'm just going to rinse this thing. And because we do have a target a lot higher up, I do a big target, but really, for me to want to go for that target today, I'd want to see a tremendous amount of value, because I'll need a big stop, a swing stop, and that tremendous amount of value for me would be buying CBOS or the daily low to go right up there. If I'm going to drift on up to me 61.8% fib, so obviously that's my first target, and the Friday target is 8252. And if I was aggressive here, you can see here, well, what, you know, things that are setting up here. Well, on the 5 minute, we haven't got a 926. The 926 is still on the way down, but there is a 5 minute frac here. There's the energy level, 200 EMA, and there's a fractal, and there's a stop. So there is a potential for a 5 minute frac, which is valid. That fractal, if you want to trade, is valid. 14 pips into C-ball 17, no problem at all. But what I'm doing is I'm actually trying to show you how to manage a sequence of trades, some that may win, some that may lose, but as a collective, you're offsetting or what you would call hedging your trading. So if you are when you hear ETFs and big funds, and you hear it called a hedge fund, that means the fund under the FTSE regulatory requirements allows the fund manager to go long and short on all the assets or instruments under his control, and therefore it's a hedge fund. Therefore, it can go long and it can go short. So they're ensuring risk all the time, balancing off, and that's what we're doing today. We've won a lot of rupees, we've lost a few rupees, and we've got an opportunity now to balance the book in our favor. So if we trade no more today, we'll win 1.99. If we get 14 pips here, we'll be up 2.99. And we don't know what's happening with the Australian dollar trades just at the moment. Those have got to play out. So, and that's in the back of my mind as well. If we get this back, that means I've got 2.99%, which means I can afford to lose both FX trades and still be out on top by 0.9%. It's always in the back of my mind. Heading to the end of the day, where's my risk? Where's my sequence of trades? And how can I manage my portfolio of trades to a win at the end of the day?
I think it's turned.
No, nothing's turned yet.
Have a quick look.
Nothing's turned yet.
Sorry, I'm on the 1 minute.
Oh God, yeah, it'll be up and down. While we're talking about that, I'll show people before we go what happened on Friday. Let's just turn this off. Let's go on to the 1 minute. You reminded me on the 1 minute. Let's put some units in. I don't know if I've left all the markings up, but I was showing, it was with Bridget, what we do to predict and things. No, it's, oh, right, yes, it is. So we're in a 1-to-1. While I remember, guys, and I'll do this, and I want to talk about the BBO bot. Right. So we're looking, when you get a market's being bullish and put in lots of highs, and you get the market squeezing in on a Friday, into the close on a Friday, we often get people Well, big institutions doing a bit of manipulation. What the manipulation is, they sell the market, they sell all their positions for a profit, and then they make their money, and then you can, then this is the sell-off on a 1 minute, and then we look for a bounce to re-short. In other words, the market comes down, a lot of retail traders that jump in to try and buy, and then they short the market again. So what happens is the market comes down. We predicted the market would come up to between 50 and 61.8% retrace. So we predicted that before it happened. The market came up, it did exactly what we said on the can, and it came back down to this area of consolidation. We expected it to do that. The market did exactly what we expected it to do. And then into settling, you can see here into settling after 4:30, what then happened is the institutions then bought back the market after hours into settling, which is a naughty trick, but they do that. They buy the money, they push the market up, sell it at a profit, get that in the bag for the bonuses, and they then put orders in at 4:30, and the market then runs off again, and that's what happened. And when I think I did mention to Bridget that the market will open higher tomorrow. So this is the real close down at 994 area. Into settling, the new close is way up here, 8,004. 8,004 was decided at here, but that was the real close. All the naughty institutions had placed orders at 4:30 and probably 1 second or a couple of seconds after 4:30. So it went into settling. It's not a trade in Friday, and it's not a trade on Monday. It's a trade being held ready for the market opening. But there are adjustments. So the adjustment was made at 8,004 when the actual market closed here. So you can see how there is a bit of market manipulation. As long as you understand the market's being manipulated, you can respond to it and understand it. The real close is down here. The institutions screwing everyone is here, and that's where the close. If you go, so you can see where the real close was. Let's have a big red line, put a big line. Real close was there. Let's go into the FTSE, and the cash close was. So the real close. Where is the real close gone? Oh, we need to go into 1 minute. The real close is here, but I'm just explaining to you what the institutions do. Push the market up. We know they're going to push it up, and as it comes off, we ride the sledge down with them, shorting the market, and then we know we're going to get a little bounce back. That's what happens, and then we ride the sledge down into the close again, and then all the orders go in, market settled, and the new price is declared as a cash close. So that's a difference between the actual close and all the orders being filled and mixed around. That's why it's really important to know what the cash close is, because it isn't really the close in the market. Hope that helped. But on a Friday, very useful to know. Very useful to know. And if the market's had a good rally every Friday, it's worth just having a little watch. And if the opportunity presents, then you can use 5-minute bar reversals, 5-minute fracks to get in the market. And if you are a bit more sportier in nature, you can use 1-minute bar and a 9 EMA. So what you would do with that, rather than go back, you look for the bar to close under the 9 EMA on a Friday, like this would be it here, and then you stay short in the market until you get a 1-minute bar closing above the 9 EMA. So you short all the way until there. So you short the market from here, and you get out the market on the close here. Market closed here, then it opened here, but that's the actual closing point. Market opens here and runs straight through and knocks you out there. Again, if you're going long, but the trend is your friend. There's a trend at the moment. On the 1 minute, you are trading short. So what would you, here, you're going against the trend on that lift. You're expecting that to happen. We're expecting a battle around the close. It's just normal. Market comes down to a retest and then runs back through again. That is just normal. So don't get trigger happy thinking the market's going to reverse. This is just natural breathing in the market. And this is what screws people's emotions up. Thinking, shit, the market's coming down, I'm going to get out. And then suddenly the market goes up and then you get, oh shit, I missed it. Yeah, you got to pick your levels and stick by it. Unless it's economic news, but there again, you wouldn't trade economic news, would you? Right, one thing I want to show people is I've done some generic, the 926, it's wins very regularly, but I've written a generic one now, which is the exact strategy on the American markets. And this bot, it actually works on the Russell 2000 as well. It's not outstanding on the win rate. The tuned bots work individually, obviously better than this. Well, we know they do. But this is the handwritten strategy. So if you manually trade this, this is a bot you can now put on every single market. And what I've also put into the BBO generic bot is all the Federal Reserve interest rate announcements and holidays and the like. So the bot avoids spikes in the market, CPIs, Fed news, all that type of stuff. And because of that, it doesn't trade so often because it's very highly tuned into what the strategy says. Avoid risk, don't trade at certain times, which is good. So on average, across the main three American markets, it wins more often than it doesn't. With the losses included, the average returns £25 per trade, even with the losses. And with the wins, the average winning trade is £69 per trade. So we use 10K as a bench. Some people have less, some people have more. It's a 79% return. For members up until Wednesday this week, so today, tomorrow, I'm offering it to members for £250 if they wish to buy it. Otherwise, it will be on the website, I think, on Wednesday for £300. One bot does 3 markets, so quite useful, really, I think. And you don't have to turn it on and off for federal announcements and holidays. It's all built. The intelligence is built into the bot to stop it trading when there's problems. So just thought I'd let you know. If anyone wants it, let me know. It's 250 quid. If you want it now, install it later, that's absolutely fine. But from Wednesday, it'll be downloadable. Well, between now and Wednesday, I can send it to you. From Wednesday onwards, it'll only be available on the website for a direct digital download. I've not got around to putting it up yet, but I thought I'd just keep it 250 quid, but on the website it'll be more because it does a lot more across all markets. It works on the Russell 2000 as well, but the average return on the Russell's probably, it equates to around about 10% per year. It's hardly worth using, but and it wins 50.5% of the time. So it wins more than it loses, and when it wins more than its actual losses. So on that basis, it's probably okay, but I'm not really bothered about the Russell 2000 really until we start getting some more tech info news, and then we're going to start trading the Russell 2000 again, like we did last year. I think that's gone through everything I wanted to go through. And what we're looking for here is to tap out for 1% fractal break is valid here, going long if you want to go long, want to practice your fractal trading. In actual fact, you probably could use 1 minute fracs on market being so slow. I'm just looking at here, can we tune this fractal? I mentioned before tuning, but we've never done it live. So what I mean by tuning, we want to go along on this market, don't we? So we want to be able to use a base, the bottom fractal line, as a stop. And as you can see before, didn't quite rightly, if you 1 minute frac, it would have stopped you out. But we can try and smooth this fractal by, opening up the configuration settings. And rather than have the base frac adjust on every one tick, we can smooth that out by increasing closing price draw at 1 bar after. If we do 2 bars after, you can see how it adjusts, and 3 bars after, then, well, actually that's smoothed out quite a lot. And what this is saying is, if you had that fractal break here, your stop would have been here. You never would have been, stopped out until up here. Let's just move that down again. How many other is it worth? Would it be worth doing that? That was a fractal break. Then your stop was up here, then here, then here. Then you obviously made a few rupees. If you'd been doing that fractal break, your stop would have been here. And as you moved it there, you would have been canned out. So actually the smoothing was not the best unless you just use this as the stop. If this is the stop, then we never would have been stopped out on that 1 minute frac. But you got to make your choice. Are you going to follow the bottom of the fractal up, or are you going to wait till you get a 1-to-1 risk reward, take your 1% or take half off? So you've got to decide how you're going to manage your trade before you smooth this off. So that one, I don't think that would have hit anyway, would it? 7, 8, 9.4. It's not done 9.4. So you'd still be in the trade from here with your stop under here anyway. So you would never have been stopped. But if you were following these up, then you would have been stopped here for plus 2.2 pips. And then you'd be in the market again here. And your stop would have been up here, and you've been stopped out for 1 pip. It's hardly worth doing it, is it? Winning 3 pips. So you've got to decide whether you're going to stay with your stop here and stay with your stop here. If you are going to stay with your stop, then you can maybe smooth it out so you know where your stops are going to be. Usually on 1 minute, I like to have a 1 bar tick to give you a heads up of, what's going on. But like kind of now, if I was trading this, watching, I wouldn't be looking at little ticks here and there. I'd be looking at the 15-minute, because the 15-minute bar, as you can see, has been set up. So the 15-minute bar, looking at the basic setting, there's a 15-minute bar reversal. And your stop would be 99, so that's 2, so that's 97, 97, 97, 97, 97, 97, there. Oh, from a base point of view, a learner's point of view, that's one that you wouldn't take. For someone who is reasonably competent at trading and can trade, then your target is C-ball with a watch out here. So your watch out here would be, I'm going to put my stop to entry when it gets to here. And you're going to squeeze the 1% from there. If you are learning this and you're using a basic strategy, it's a no trade, because you can't complete the trade within the last previous swing high. But that is a valid 15-minute bar reversal. But we've already got a trade on, so that's absolutely fine. The DAX. The DAX. BBO, that all right, that's where I did put a line in where I wanted to actually buy this market today. I want the market to come down to 15,430 and put in a 15-minute bar reverse. If it could come down that low, it's not good. It's on a daily, isn't it? 4 hour. So what I was looking at, you can see here, just trying to put a roughly mean without looking at cash pivots, looking at price action. We broke that support yesterday, and then you can see quite interesting. The market's following this line of support and resistance, and then it's peeled off again. If we can get down into this area, that would get my interest to start to look for a buy. But if we do see a 15-minute bar reversal before the BBO kicks in, then I would be interested in that as well. So there's a 15-minute bar just starting, just there. At the moment, if it doesn't rise too quickly, the 15-minute bar trade would be there and would qualify as a legitimate trade long on the 15-minute bar reversal. That's in my plan. I will be taking it. So I'm saying it's in my plan. I'm sure it's in my plan. Why does this keep doing that? I really don't know. Yes, 15-minute bar reversal. Yeah, so far we're 1-2 lost 1, and we've got a few in train at the moment. So yeah, just to reiterate, with the for people who want the bots and want me to install them for them, I can do that this afternoon, no problem at all, because there's no American markets. The bots won't work because the intelligence has been written into them, so they don't work because it's President's Day and they don't trade. I think it's a BBO generic. I think I put it on here just to check it. Oh, I didn't. No, I thought I'd put it on here to check. Right. Oh, there we are. As you can see, all these different codes are in here now to avoid trading days, Federal Reserve issues and the like. It's quite easy to install. You just press automatic trading and you add all the different instruments in a list down here and press install, and it installs it ready for all 3 markets. But give me a shout afterwards. It's okay I'm okay to install them today, tomorrow. On Wednesday, they'll be on the website self-serve at a different rate as well. Right, any questions about anything before I go?
Nothing to do with that, but do I need to turn off the others, Americans? I can't remember if they're already sorted for dates.
No, what I will do, I will update the NAS bot today. Yes, so the answer is, Bridget, yes. Turn your NASDAQ bot off.
Right, okay.
Now, the quite interesting thing I was looking, it's a 50-50 historically whether the NAS works or not when it's a Federal Reserve CPI or holiday. So I took the executive decision on the generic bot to say don't trade, because it's only a 50-50 whether it works. So you can either leave it on, and it probably won't work anyway because the market will be flat. But when it does click in, it's a made market. So if the UK market has a big rally in late tonight, then the NASDAQ will probably be all right. But I'm going to put the intelligence into the version 1.1 NASDAQ BBO as well, but that works a lot better than the generic. But as you know, stop my waffling, Steve. Turn it off, Bridget, and I'll send you an update. I think Bridget, I think you're the only one with a NASDAQ bot, aren't you?
I don't know.
In the people that are in the room, I mean, from the people that are in the room, no one else has a NASDAQ bot. No, so I think it's just you, Bridget, that has a NAS one. So I've not put that on the website yet either. So as I'm handing these things out to traders, I should put them on the website as well. I know this doesn't sound good, but part of me, it's a pain in the ass. As soon as I put the ASX, I got 160 odd buys, 160 odd sold straight away in a matter of a couple of days. But then I got probably 100 emails on queries about them. I really couldn't be asked answering them all. But if you're going to sell it, you have to customer service, of course.
But the others are okay, aren't they?
Yeah, I could stick Helen on them. She can just answer them all, I guess. But
I'll just...
yeah, one thing is just have to write a help document that goes with it on the website to say this is how we install it and all the little Q&As, you know, because you know, if it was an asset that was a reasonable price that you could be bothered answering you know, getting spending half an hour on it, then you know, but if I put these on and 100 not go out the door, do I want to spend 50 hours potentially? Not really. It doesn't sound, not a good salesman, am I?
Well, I don't know.
Can't be asked. Right, okay, yeah, so let us know, guys, on the BBO if you want it. It will be out on, I've been told, Wednesday for sale, but up between now and Wednesday, I can send them to you and install them for you. So if you want me to install it, you let me know when you log off. I'll log in and we'll get it all changed this afternoon before 5:30, and that'll give me time to write the intelligence into the NAS BBO aggressive one. Okie dokie.
Right. Okay.
All right, guys. If there's no more questions, well done with your trading so far. And we're up at odd Japani and odd USD as well. So that'll be quite nice if those two come in, then that'll be another 2.5%. Be nice if they did, but we'll see.
As you can see, there were the trading results for the day. Overall made 2.2 and the trades come in nicely indeed.